Welcome, and today is the 1st of August 2013 in the early Asian trading sessions towards the opening of the European trading sessions. We would be expecting an increase in the ISM manufacturing figure and culminating the price action towards Friday, where the non-farm payrolls and unemployment rate would be adding to a long list of market volatility where participants would have to absorb, as the market has indeed made some dramatic moves, especially the Euro pound cross rates, which we are actually focusing on and supporting our market view analysis dated the 29th towards the current price levels, which is at 0.8750 currently. And what we have here is a daily compared to the weekly of the euro as well as cable in itself. While taking into consideration the technical angle of the cross rate euro pound, isolating the fundamentals, which was already mixed in the market, has probably given the US dollar some relief as far as a slight recovery from yesterday movement. However, for the past week alone, after the decline of the euro pound from a high at these levels at 0.8709 dated the 17th of July and drifted lower even below the actual trend line resistance of the triangle formation previously, which we would be showing you in a while. But however, the three consecutive bars here on the 25th of July have already indicated that the probability for this particular currency pair to move higher has already given its positive signal and tone. That is why you could see here on the left hand side that we've taken another long position, anticipating that the prices would continue to move higher within its relatively interim channel. But however, as we have made mention, this is the resumption of the main directional trend moving forward on the high scale lever, where it has touched 0.8765 and currently on a session to session correction at 0.8751, as you could see here on the left hand side of the chart. The daily looks actually more corrective, especially so with this particular candlestick bar formation here with the euro, because the dramatic move on cable had been more as far as the decline is concerned compared with that of the euro dollar, simply because as far as the supportive fundamentals has been made for the euro when the Eurozone's unemployment rate had moved lower, considering that had supported a gradual decline for the euro in itself, continuing a stronger recovery towards the last trading hours of the American trading session earlier today, where here the euro did make a registered high at 133.44 with a low of 132.06. Meanwhile, cable did made the low here at 151.21 at this time and made a slight recovery within towards the closing and a continuation of the decline as of now back to 1.5152. Now, considering these comparisons between the euro cable and the euro pound in itself on a daily basis have shown that this particular configuration, while prices are declining on a slide and recovered here, have already, as we have made mention, made a signal that the prices may eventually continue to move higher. As we made mention, this would now be the resumption of its directional trend since December of 2012, where we have defined it as a reinforced trend, especially so after its major corrective move has been attained and the continuation of the price trend to move higher, targeting the 8750 has now been achieved. Basically dissecting this colored configuration here into a 4-hourly chart, as you would see that the downtrend channel here from a consolidation has moved exactly at these price levels at 0.8701 as the pivotal point on the 4-hourly chart, where the measurement of its particular rectangle of that particular consolidation has moved twice as much with a follow through, where it had established its exact channel resistance at the current high at, let's see if we can get it here again, at 0.8764. The current price action for the euro pound is considered corrective, especially so as you could see that the euro in itself is moving lower at current time at 132.66, but the moving average here would be 1.3209, say 1.32 even, before a corrective move or pullback would be experienced on a session basis as well. But as far as cable is concerned, looking at it on the 4-hour as well, let's see if we can get a side by side here, wherein prices are actually correcting, as made mention, and also here with cable. Going back now for a comparison on the daily, that particular trend line resistance is now providing some liquidations, where we would also consider liquidating some of our positions, leaving just probably one, just simply to test the market on the way down for any trail order. When it closes for the day below the 0.8698, say 0.87 even on the euro pound cross rate. While the Williams percentage rate at this time is basically correcting in itself, while the stochastics is trying to meet on the way when prices would do decline on a daily basis, but we still have a couple of more major risk events that we would be waiting. While looking at the weekly chart here, let's convert the two others, the pound and the euro, on a weekly basis. This looks quite familiar to you with our previous video, where we have identified a flag formation on a triangle where it had broken, and we did made a follow through on our recommendations. And this is the slide that we were talking about prior to that up movement here within the channel, and considering the corrective move from this previous high and channel resistance closing lower, but not on the price lower at 0.85 even, where we used to have a long positions, the 0.8492 and 85, even 05. On the way higher, we have established long positions here and currently working at a 0.8752 gain. As you could see, this particular trend line support has been very strong, especially so when every time it reaches the 0.8468 level, which is indicated here on the yellow line, and looking at it more encouragingly with the monthly chart. Here, as you would see, that this particular movement has indeed been justified and touching the resistance of a Gartley pattern, where the formation from a bull market now would be in the making of a bear Gartley formation, but however it has to make a rapid price movement nearest to the 0.8849 level. Using the Fibonacci timeline as far as its cycle is concerned, in the next couple of months would be the prices where would be considered a major correction would also be in the making. But so far, before that happens, we're looking at first the initial up move with only small or slight pullbacks on a daily basis would occur, because by then, when prices do move higher, there would definitely be not only an overbought area but simply a selling pressure where a divergent trend would be established. Prior to that, right now the stochastic still looks more positive, but however, going back to the weekly basis, it is right smack on the resistance channel at this time. So we would then be considering, even if it's on the early Asian towards the opening of European trading session, we would be placing an order that would be trailing on the way lower to be able to liquidate this position. However, we would not be doing that as of now, but later on we would be considering a market order, liquidating more on two contracts and leaving one behind, and that would serve as being able to possibly maximize the potential of the market in spite of the possible correction lower. So we would be cashing in just a couple of that shortly, but right now we would be looking at the market, whether to liquidate it or not. Okay, we will just look at the market at this point in time. I hope that this market view analysis on the euro-pound cross rate would serve as a guide for you as well, and would like to say thank you for patronizing our market view and video support. Have a good trading weekend, and only the best for your trades.